where are we right now? Oil prices still jumping. Even the U.S. oil is jumping massively, 2.8%, nearly 3% today. That's slightly above $60 a barrel. Our benchmark here in Nigeria, the Brent, $66.61 a barrel. It's looking all good thanks to the OPEC sound bites over the weekend. Russia and Saudi Arabia, the two big boys at the head of the table, saying they agreed to between 6 and 9 months extension of supply cuts among member states. That will take us through the first quarter or second half or the first half, then the first half of next year. All members are expected to ratify this position at today and tomorrow's meeting. We'll still keep reporting on that for you. So this is one big story. Then, of course, we had a bit of a nice weekend on the geopolitical front. Iran was slightly quiet. Then U.S. President Trump stepped into North Korea via the DMZ for the first time, becoming the first U.S. president to do that. Then, of course, he was coming all the way from Osaka, Japan, where he attended the G20 meeting, where he said he had a handshake and there's a truce between Washington and Beijing as far as the trade fight was all concerned. So we had a bit of a cool weekend. The markets rallying this morning. Global stock markets looking really, really green. Gold prices tapered off from that. Investors moved into riskier assets since yesterday. And then we're looking at something very quiet to start the new month. So let's put all of this together. And I'm going to throw that to Juliana Olayinka, who's my colleague at our London Stock Exchange, down there to take us through how is she reading the global space for us this morning. Looks like a very nice weekend to end the month of June, and welcome to July, Juliana, with President Trump. Truce talk with Beijing. That looks like some good news. How's the market trading this positive weekend from President Trump?
Well, good morning, Bosun. That was a lovely geopolitical roundup from you. And I must agree, look, the FTSE is off to a flying start this morning, rising 68 points or 0.9%, which is a 2-month high over here. Now, analysts are saying this inevitably is to do with those long-awaited high-stakes trade talks between Xi Jinping and President Trump, which went well, according to accounts from both sides. Now, America's threat to impose a 25% tariff of $300 billion of Chinese imports will be delayed. Another kind of wrap-up of what their conversation included was no new tariffs, some access to US tech for Huawei. You remember they were, of course, placed on a blacklist last month. There will be better visa treatment for Chinese students, and the US will be getting bigger Chinese purchases for American farmers. Now, China have already put this into action, as there was a last-minute purchase of more than 500,000 tons of soybeans in a deal worth $200 million. And that happened just days before the G20 meeting. Clearly, she was putting out an olive branch there. Now, the detail is lacking, but the markets are happy for now. The simmering trade row between the US and China has already cost companies in both countries billions of dollars. Tensions have also disrupted global markets and thrown manufacturing and supply lines into chaos. Now, Bosun, it's important to note that some city traders here in London are quite skeptical about just quite how much progress has been made. But for now, at least, there appears to be a way forward. So hopefully we won't be talking about it every day this week.
Yes, Juliana, some folks are still head scratching about whether President Trump is going to pick up his phone inside Air Force One all the way back to Washington and perhaps just remembered something. And while he's tweeting some 40,000 miles above sea level at the altitude there, and then we all go back to the barricades and everyone's scrambling around again. What are we going to do with this? But for now, let's enjoy it as long as it lasts. But you hinted about the PMI, the manufacturing numbers coming through from China, from South Korea, looking negative for the month of June. And the UK is also manufacturing sees its weakest month since 2013. So this is we have the trade truce. Thank you, Mr. President Trump. We like that. But again, we're still dealing with the consequences, intended, unintended consequences of the trade fight as long as it lasted, at least until Sunday.
Well, Well, it'll be interesting to see how the markets react to this news at intraday. UK manufacturing PMI figures have been released, and for the UK, these figures are much worse than expected. Britain's factory sector has suffered its sharpest contraction in 6 years. We seem to be speaking about this every day now, Bosun, but it's becoming a reality for business in Britain. Brexit uncertainty is hitting hard. Now, in the run-up to the 29th March exit date, manufacturing companies had stockpiles on goods with panic, basically, to prepare for the potential of a no-deal Brexit. Now, the Brexit date has since been shifted twice, and UK factories just don't have enough orders to help them quickly plough through their inventory stocks. So it's a very, very worrying sign. And like I said, the economy is contracting, and very importantly, the manufacturing part.
Yes. Okay, let's allow you to take a breather. Juliana, then you get together with Chimeze in the afternoon to give us a bit of an intro there. If we're still holding this nice, smiling face, holding it together into day and see if it's going to last us to the end of the day. These days, you got to live as it comes, one day at a time. One day at a time. Thank you, Juliana. See you in the afternoon on our afternoon show.